Hi, good afternoon everyone. This is Zarais from Parallax, and in today's video I'm just going to break down the Fibonacci ratios for motive waves. So Fibonacci is very common within the financial markets, especially within technical analysis. And one of the strategies that Fibonacci is very popular is within the Elliott Wave Theory. So Fibonacci was actually formally introduced to the Elliott Wave Theory by Ralph Elliott himself, and I believe he wrote it in his book called The Nature's Law. And in that book, he also mentioned how, other than the financial markets, the world, such as the human body, plants, butterfly patterns, and the universe itself, is actually all formed within a Fibonacci sequence. So there's no surprise that the financial markets will also be formulated within a Fibonacci sequence. So the way he mentioned it in his book is that he taught traders and analysts to use it as a retracement and a tool to figure out where your price targets may be. So for example, in front of us, we've got a sort of an ideal version of an impulse wave. So we can see a 5-wave sequence. And what I've done here is I've actually broken it down that we have different ratios for when price is correcting and then when price is also extending. So for example here within wave 2, the most common ratio to find wave 2 correcting is 61.8% of wave 1. So that's the most common, but that's not complete gospel. I mean, if it's 61.9%, it doesn't necessarily mean that that's it, we can't work with this anymore. The ratio is usually between around 38.2% going up to 78.6. It can even go a bit more beyond that. So you see like 38.2 when we are playing within wave 3 of 3. So wave 2 of 3 of 3 would possibly be around 38.2 because of the nature of the market is so steep and the rapid moves within that wave. You won't expect wave 2 to retrace as deep as 61.8. But there's no, I mean, you can't even stop the market retracing all the way to 80%, 90%. Honestly, there's no sort of, a written rule. This is all a guidance that we are using based on what's the most common ratio and what is our sort of region that we see the price ideally bouncing from. So like I mentioned, wave 2 is around 61.8%, which is the most common percentage of wave 1. And then I want to actually stick to retracements again. So we know wave 2 is one of the corrective waves, and wave 4 is also one of the corrective waves as well. And wave 4 actually, in fact, corrects more. I mean, the most common ratio is around 38.2% retracement of wave 3. So this wave here. So it's not similar in terms of the percentage as opposed to wave 2. Based on many reasons. For example, one of them is that wave 3 is usually the impulse wave, the extended wave out of the 5-wave sequence. So when we do the retracement tool on wave 3, it wouldn't go as deep as maybe 60. I mean, it can go up to 50%, 61.8, as long as it's not breaching into the territory of wave 1. But the most common ratio we have noticed is 38.2. So you also notice that the depth of wave 4 and 2 are probably similar, but because of the length of wave 3, it usually goes to 38.2. Like I mentioned, this is not gospel. We will have a range, it can go up to 50%. I've seen it many times. 61.8, as long as it's not breaching, wave 1 is very, very common. So that's the two retracement ratios. So let's get onto the extensions. So for example, imagine we're playing within wave 2 and we want to get into the trade and go long here. So the most common, I mean, here you can see is 3 different ratios. So the first most primary common one that we do look at is 1.618% extension of wave 1. So the way we would draw that is we would get our extension tool we'll start from the original point of wave 1, go to the extreme of wave 1, and then we go to the extreme of wave 2. So what we're actually essentially measuring is this, aligning it here, and then it will extend into 1.618%. Can also go up to 200%, and it also can go up to 2.618 as well. So it just depends on the nature of the market, how much how much depth it wants to go. But the most realistic target that we do aim at is 1.618. And wave 5 is also it's pretty similar to wave 3, but we use wave 1 as well, because, for example, the most common is that wave 5 equals more or less, so emphasis on that, more or less, not to the T, more or less the same length as wave 1. So we draw the fib tool from wave 1's original point to the extreme of wave 4. It can also be so it depends on wave 3's length as well, but it can also be 0.618, which is around here, and it can also extend to 1.618. And you'll see that fifth wave extensions where they are the longest wave, not necessarily saying that wave 3 is the shortest, but fifth wave can be the longest wave, more commonly around the commodities market, such as oil. So you'll see the extension of fifth wave 5 within these regions will be possibly around the commodities area. But any other asset classes, like I said, more or less around the same length of wave 1. So I have an example here on Apple. So this is the weekly chart of Apple. So Apple's been playing within this wave 1, and then it went into correction around the Jan 2020. I believe this was around when the news of the pandemic was released. But so we had a correction here, and we had an extension to complete wave 3, a normal impulse wave, and then we went into this wave 4 correction, which is a running triangle, and then we saw 1, 2, 3, 4, 5 to complete wave 5. Okay, so let's start with wave 2. With wave 2, so look, this is the extreme of wave 1. We'll draw our retracement tool right here. And then we can see that it literally bounced at 61.8%, and it climbed to the upside. So that's very, very, it's very precise. I don't really see this precise, especially in the FX market. I don't see this precise. Usually the market can retrace, within wave 2 around 50%, 61.8, 78.6%. And let's look at the wave 3 target. So draw this from the original point of wave 1, extreme of wave 1, and let's go to the extreme of wave 2, and look at this. So it did breach, it did go above 1.618, but it didn't close. It really didn't close. It closed a little bit here, but we can see this is the wick. So this is you can see this is an ideal target to have when we are getting into a trade when we're playing wave 3. Now, let's look at wave 4 correction. So I'm going to draw the Fibonacci retracement tool from the extreme of wave 2 to the extreme of wave 3. And we can see, although this is a running triangle, we can see wave A actually, it's a kiss and run. I call this a kiss and run. It's a weird way to say it, but yeah, literally touch and go. Close a little bit beyond 38.2. Like I said, it's not gospel, it will close a bit beyond it. It won't just literally be very precise. And it just climb through, played within the triangle, and then continue climbing to the upside. And then finally, wave 5, let's have a look. There we go. So we can see that, it did reach the 100% of wave 1, but we can see it did extend a little bit into 1.272, which is another, you will see the price. The 1.618 is here, so we can see price, touching this like 1.21, 1.272, 1.414, and going up to 1.618. So we can see here that this is a very good example that I have used within the stock market, and it's Apple, because The stock market usually respects the Fibonacci ratios more often, as opposed to FX and other asset classes as well. And not to say they don't work for the other asset classes, because they do. They work for like a charm. But as you can see, the stock market is a bit more, I would say, respectful to the Fibonacci ratios. Now, there's another topic that I want to mention. I just want to briefly cover is Fibonacci clusters. So as you know, that when I was discussing this, I mentioned to you guys that various different ratios here. We've got a few different ratios, and I said to 38.2 for wave 4 and 61.8 for wave 2, but it's not gospel. We don't hold the market by this, to the actual pip. So there's a really good way to kind of like forecasting that where a price may go. Now, for example, hypothetically speaking, this wave 2 here, imagine we're still playing around here, extreme of approaching the extreme of wave 2. So then what I would do here is I'll draw the Fibonacci tool across wave 1. Maybe I'll just put like a marker around 61.8 because it's most common. And then what I can do is, now I'm going to cover this tomorrow on Fibonacci ratios of different patterns, corrective patterns such as zigzag, flat and triangle. But you can also use, for example, we can drop down time frame, you can drop down the degree, and then you can use Fibonacci ratios to also cluster the ideal sort of area that we may possibly see market bouncing from if we're playing wave 2. Now, for example, here, if I go to the extension tool, so this is an ABC. Now, can you see here? I'm going to mention this tomorrow. So equal leg. So A equals to C. C equals to the equality of A. And we can see that it kind of stopped around here. 618 came, that line, that ray line I drew was at 1.272. So what to do now is, you get a box, get a nice little, I think this is a blue color box. And I'll draw this here, like that. And that's my region. Now you can see I've used Fibonacci clusters. I've used 2 different ratios of Fibonacci that are favoring this region, that the price will bounce in this area. And it did. It closed in there and it continued to advance to the upside. And you can do the same thing with wave 4 here as well. I mean, this is a running triangle, so it'll be pretty difficult to do that, but you can do that if it's, for example, a flat or a zigzag as well. But a wave 3 extension like this, you can use the Fibonacci extension tool, like I said here, and we got this 1.618. Or if we go down time frames and look at wave 3, what you can also do is, so 1, 2, 3, 4, 5. Let's see how well this works. You can, I mean, look, it extended quite a lot, but yeah, you can see the point I'm making here is we'll probably be aiming around the 1.618 area. But like, for example, if I draw a ray line here, there's 1.618, and then if I go to the weekly time frame, where's it gone? There we are. And let's get this ray line onto the weekly. You can see that there. And if I draw this right here, you can see 1.618 is here. You can see that this is another shade that I've drawn, and this is where ideally the target should be. At the end of the day, we want to make the cash register go cha-ching, right? There's a shaded area right there. And finally, for wave 5, we'll do this. For example, equal length is right here. Now there's another way you can also measure the wave 5 is It's going to be a bit difficult with the running triangle, but I'm going to teach this in another lesson. It's called Fibonacci Inversion. And then what you do is you actually use the Fibonacci inversion of wave, you use the Fibonacci retracement tool and you do an inversion. So you start from the extreme, original point of wave 4, and then you do up to there. You can see the prices up, of that previous one that we measured. Quality of wave 1 is there, and then 1.618 inversion is right here. So get in a trade. If we targeted around here, honestly speaking, if I was playing within this wave 5 and I get out this trade here before all this choppiness, I'm happy. That's a smile on my face. So you can see that we shouldn't religiously be using these targets. We should be using Fibonacci clusters to kind of like break it down to find a region, and then you should, once the price goes in the region, then you can use your discretionary on how the price is moving to take your profits. So that's one ideal way I would say that Elliotticians use to figure out targets and retracements as well. So I hope this video was helpful for everyone. If you have any further questions, feel free to give us a shout in our Discord server. Happy to answer any more further questions. Take care. Hope you all have a nice day. Cheers.